Morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to you guys. It is June 2nd. We got a bit of economic data, the big ones for this week coming up here, so let's jump right into it. We'll start off with the non-farm payrolls for the month of May. So last month we had 174,000 new jobs, and that was actually reduced. So April and March numbers were reduced 66,000 by 66,000 jobs. They dropped by 66,000 jobs, so those were revised. Now the forecast was 185,000 for the month of May, and it came in at a very disappointing low of 138,000 new jobs here. So obviously not a good day so far. Starting off here, unemployment rate 4.4% in the month April. Forecast for May was at 4.4%, and it dropped to a 16-year low of 4.3%. Now, a lot of it is due to less people in the labor market. So the labor, the labor participation rate dropped from 62.9 to 62.7. So that dropped about 0.2%. And so that's what we're seeing. The U6 number, but the good news, one of the good things is the U6 number dropped from like 9.7 last year to 8.4% this year. So the U6 number is down to 8.4%, which is much better than where we were in the past. Last year it was like as high as 9.7 at this time. So that's one positive. Economy is moving upwards, which we're seeing here. Also, participation rate, of course, we're going to see some people starting to drop off because we have the baby boomers retiring now. So we're going to start seeing some of those people coming in, dropping off. So a little bit of mix. Some of the numbers could be skewed here, but it is overall disappointing to see. Average hourly earnings here for the month of May here. You got 0.3% last month back in April. Forecast for May at 0.2%. It came in expectations. So average hourly earnings really aren't going up too much here, but they are from year over year. I believe it's 2.5%. So not too bad, I guess, in that respect. So that's something they're gonna the Fed will be watching here at their next coming meeting, watching wage inflation. So see if that brings up the overall inflation here. Remember, the Fed is meeting on June 14th. There's a 93% chance. All these numbers here did not change the Fed funds futures, where they think it's about 93% that the Fed will raise rates. But at some point, you're going to think that with these jobs numbers not as rosy as we thought, inflation has gone in the dropped actually instead of going upwards. We're down to, I think it was 1.5 or 1.6% year over year on the core, where they want to be at 2%, and at one point we're even as high as 1.8. Those are things the Fed's going to have to consider if they're going to continue raising rates. And also, Congress needs to do their job. Congress needs to get some of these bills passed, from the health care, from the tax reform to the infrastructure building, stuff like that. So keep in mind, right now we're still not quite where we need to be for, especially like stock prices, where they're currently rated at. Speaking of such, stock market is up. They had a little slow start due to the job numbers, but since has come up. So again, I think the Dow is even up over 100 so far this morning. Oil prices actually dropped a little bit, and a lot of that is due to concern. The investors are kind of thinking, since Trump pulled out of the Paris Climate group, that perhaps he may have in mind to allow the U.S. to start producing more oil, which will create more supply, and dropped oil. The price went down as more of an assumption of that. So, I guess that might be good news for us at the gas pumps here. Let's take a look here at the bond market, and the bond market, of course, is taking off. This 200-day moving average, which has been pretty tough, we jumped up over that. We are up about 31 basis points due to the bad job numbers, so that's helped us out a lot. So definitely an improvement in interest rates today, so that's obviously very good news here. All right, folks, so that's pretty much concludes it for the week here. I hope you guys have a great upcoming weekend here. Hopefully you guys are going to enjoy some summer here shortly. But if you guys want to get some more updates throughout the rest of the day, just come over to Twitter. I do post at my Twitter account, Mike Bjork, and you can get more updates throughout the day. Also, if you guys are looking for a mortgage, if you guys are looking to buy, I can help you with your pre-approval and financing for the next property. or I can also help you with your refinance needs, from taking out of an adjustable rate mortgage, maybe putting it to a fixed with the rates going up, or you want maybe go from a 30-year fixed to a 15-year fixed, or perhaps you might want to take money out of your the equity of your property and reposition to other things. So there's a lot of different things we can help you out with. Another thing that's been real popular are people with home equity lines of credits. Are they've had them for a while now. They're starting to amortize, and they want to reposition into the equity home. So we're doing refinances, putting out one mortgage instead of two mortgages. All right, folks, you guys have a great weekend. We'll look forward to seeing you on Monday. Thanks so much for watching. Bye-bye.